Hi, everyone. I'm Mirela Ciobanu, lead editor with The Papers. Welcome to our Leadership Insight series, where we explore the latest trends shaping fraud compliance and cybersecurity. Through conversation with industry leaders, we aim to help fraud and compliance professionals stay ahead of regulatory shifts, strengthen collaboration, and align their strategies with emerging best practices. Today, I'm joined by Ivan Stefanov, CEO and co-founder of NOTO, to discuss the reality of AI in financial crime prevention. What's working, what's risky, and what's just hype. Ivan brings extensive experience in fraud prevention across financial services and the crypto industry, having held senior risk and fraud leadership roles at Groupon, PaySafe Group, and Crypto.com. Ivan, welcome. It's great to have you here with us.
Hey, pleasure to meet you. Thanks for having me today.
Yeah, and I look forward for our conversation because indeed AI has been on everyone's mind, lips, events, you name it. So let's start by clarifying the terms before this becomes just another generic AI conversation. Financial institutions have been using AI and machine learning in fraud detection for years. What type of AI are we talking about today? LLMs, generative AI, agentic AI, and how is this wave different from traditional machine learning models banks already use?
Indeed, it's good to level set before we deep dive because the more we climb into the AI hype cycle, the more these terms continue to get used interchangeably, which should not be the case. And maybe there is a little bit of a mix-up and lack of understanding around that. Machine learning is a sub-area, sub-discipline of the whole artificial intelligence field. This is what we need to be really clear about. And AI does not equal machine learning. It's the broader overarching discipline of artificial intelligence. So there shouldn't be a sign of equality between the two. You can think of AI being kind of the broader goal and machine learning being an instrument of achieving it. If we make an analogy, that would be let's take a fully self-driving vehicle, something that is very also relevant and probably just around the corner nowadays. AI using large language models is the bit that will make the decision whether the car to go left or right following a navigation route or whether to stop. And machine learning is the models that would differentiate a human from a cyclist, from a motorcyclist, or from an animal on the side of the road. And then, if we look into what the different shapes and forms of AI that you mentioned are, what's generative AI, what is agentic AI? AI is, or let's go one level deeper, the large language models. You can think of them as the backbone of the whole AI infrastructure, the bookkeeper in the library. Then the agentic AI is, the equivalent of the SME, the employee that acts on the decisions or on the summaries of the generative AI that produces content, produces summaries, and the agentic AI picks that up and executes a series of decisions or actions. The generative AI can summarize why a transaction is potentially suspicious in banking, summarize why certain rules have been fired on that transaction, what do they mean, and then the agentic AI can fire out an email to request something from the end client or can escalate that transaction or alert into the case management queue, triggering further decisions out of it. I think that really captures what those different terms or different bits of technology automating certain processes at present do and mean.
Yeah. So yeah, thank you for clarifying and for bringing so relevant metaphors and images, practical images for our audience to have the things stick, like the AI being the backbone and the agentic AI being the employee. But now, yeah, why AI is suddenly the hot topic in financial crime now? Is it driven by real performance improvements, competitive pressures, regulatory expectations, FOMO, or the fact that AI can now be used both by banks and by criminals?
Well, that has always been escalating, and gradually developing. Also, we need to acknowledge that we are probably at the apex of the AI hype cycle. So, FOMO is certainly a major driver, major component out of it. C-levels looking at news coming from their competitors and peers that mostly talk about increased adoption and already early adopters reporting some positive results and the beginning of the receipt of positive ROI from AI implementation. On the flip side, I think criminals are always the early adopters. They don't follow the typical implementation steps, evaluation steps when new technology is being brought on board. To them, issues with accuracy, issues with hallucinations are obviously not a concern, right? And using AI to automate large-scale phishing attacks to create a very easily fake identities, bypass the traditional client onboarding process controls is something that is already happening. And false positives and inaccuracies there don't matter because you are on the side that's outside of the law. So, yeah, it's a combination of what really makes AI the hot topic of the day.
Yeah. So, in a way, you kind of hint a bit to my next question regarding what are we hearing from financial crime leaders right now? Because you said that some mentioned, besides being this FOMO, some positive results. So, when you speak with the heads of fraud and anti-money laundering, what are their biggest concerns? What are the worst case scenario they fear? However, on the other side, yeah, what are the most convincing success stories you've seen?
Yeah, the financial crime leaders, experts, SMEs are all seeing some commonalities. An escalation into automated scams, mostly run by AI, them reaching really worrying scale, fake generated content that mimics identities, mimics real people, is also certainly something that keeps them at night. In general, what they're concerned is that the attack vectors are increasing. More and more of the end consumers that they're trying to protect are being exposed to such chaos. Incidents like account takeover scams are in proliferating numbers. On the flip side, when it comes to their own adoption, they are already being able to try that technology through whether existing vendors that are added up on top of their platforms and solutions, or others that offer, let's say, ready-to-use agents out of the box that sometimes just don't require implementation or screen scrape. And let's say they're mostly optimistic when it comes to automating some repetitive processes or summarizing large bits of information. Generally, the drift is towards augmentation, not necessarily replacing. And I think that's the approach that makes sense as well.
Oh yeah, and since you mentioned augmentation and also this possibility of using it, building inside or adding extra capabilities to it. Okay, if an AI, if a financial institution deploys AI correctly, what concrete problems can it realistically solve today? Alert triage, positive, false positive, sanction screening, case investigation. Where does it truly add measurable value?
Yeah. To answer that question, we need to go a step back and ask ourselves, and everyone who is in the financial crime prevention space should start with how the financial crime prevention process looks like. We have the real-time element that's related to transaction scoring and decisioning, whether that's for the purposes of fraud prevention or anti-money laundering. Then we have the element of review and investigation. It bears different focus in fraud or AML, but it's still an inevitable part of the process. Then you have the third leg, which closes the loop, turning it into a truly iterative and cyclical process. This is analytics and response. You analyze your real-time decisions, their accuracy, how much of good and bad activity has been either subjected to friction or successfully prevented, how efficient is your review and investigation, and you update your controls, right? It's a never-ending process that keeps busy everyone in financial crime. So obviously, at the real-time step using LLMs is still not the case. LLMs are incapable of scoring tens of thousands or hundreds of thousands of transactions per second in a matter of 50, 10, 20, or even sometimes, very aggressive response times requirements. But at the next two stages where it comes down to human SMEs to identify patterns, to collect data from different sources, to draw conclusions, to summarize them, to identify or monitor a large number of inputs and dashboards, that's where AI agents, different implementation and deployment of AI is really able to augment human SMEs, increase their accuracy, their productivity, and ultimately help them keep up with just generally increasing volumes of online human not present transactions, so to speak. And yeah, this is, I think, what will continue to be the field for future AI implementation and experimentation. Those two, let's call them offline bits of the monitoring process.
Yeah, so here you mentioned several benefits that it can bring, like increasing accuracy, productivity, keeping up with, increased levels of transactions, number of transactions. But AI is not magic. How does it need to be trained and governed to deliver what a financial institution needs? What role do data quality, human oversight, in a way you kind of hint to it, and model governance play? And how do institutions avoid deploying something impressive, but that doesn't solve a problem?
Oh, like any new technology, it needs to be approached with the necessary amount of planning and evaluation, starting with where am I going to deploy it? How does the use case exactly look like? What are the outcomes that AI needs to deliver? And again, where is my data going to actually end up living as a result of the use and training? Is it going to leave my premises? If yes, where? Is it going to be shared with anyone else? Or let's say, the GDPR implications that we need to be cognizant about. Obviously, we have the EU AI Act, which covers things about bias, how it needs to be controlled. We have a lot of other regulations to keep in mind about operational resilience, because if you make it a critical part of your process, you need to consider the operational resilience aspect as well. And if you lose that capability, how is it going to impact or not your monitoring, review, and investigation process. Certainly, I wouldn't err in favor of complete and unplanned replacement of human SMEs, because in a lot of areas, this would mean increased risk to regulatory fines and scrutiny. If you're making decisions that you are not 100% certain without human validation, may mean that you are in breach of a lot of regulations out there. Again, that might be overlooked in favor of short-term business benefits, but something critical that certainly organizations should keep in mind is if you exclude the human in the loop, you are running the risk of expertise and knowledge erosion. What happens if you completely remove your investigation teams from transaction and alert and case investigation? You are solely relying on a set of AI agents or whatever AI setup you are running to tell you what's happening with your transactions. What happens if that's wrong? So, yeah, complete and hasty replacement of human expertise is probably something that really needs to be questioned and even avoided.
And if you think that besides this, you also have explainability bias, hallucination, and the fact that sometimes models even lie, the question would be how real are these risks in financial crime use cases? I mean, can AI generate outputs that look convincing but are operationally wrong? How should banks think about control and accountability?
Oh, these are very real, and they do happen not just in when AI agents are being used in RegTech. They do happen when, let's say, developers use them, and getting it almost right is exactly what you described. Something that looks plausible, it's very close to being accurate, but it's not true. And this is where, in financial crime prevention, it may mean actually missing a potentially sanctioned individual in your alert screening because the summary looks very convincing, but it very well might be the person that is on the sanction list, which is a major violation if you are a financial institution and you neglect that. So again, having clear use case definition where in the whole evaluation and decision journey the AI agent is deployed and keeping the human in the loop, I think is the recipe to minimize the potential for becoming a victim of AI hallucinating or lying. They're limiting it to a number of outcomes is one of the safest approaches in its deployment.
So in a way, because many discussions around AI go around also this fear of people losing their job. So from what you are saying, in a way, here we are on a safe spot. I mean, the human will still play an important role when it comes to fraud compliance and cybersecurity.
Well, if you want to run a strategy that's future proof, I think retaining your SMEs and just enabling them to be more accurate, more productive, focusing them where it matters is the way forward. Certainly, shareholders, investors would love the tune of overall cost reduction. Humans being reduced by machines, by AI, because these don't need time off, don't need sick days, can be productive 24/7. It may be true, and I think history has indicated that in industrial mass production, a lot of jobs over the years and the centuries have been automated by robots, etc. And it can be the evolution in the financial crime prevention space, but I don't think it's something that will be the case tomorrow or next week. It will be more of a natural prolonged evolution process.
Yeah, but now a question more, let's say, personal. because most of the time when we address the use of AI, we think of how financial institution leaders think or approach AI. But you also have been working in financial institutions like Crypto.com and the PaySafe Group. I mean, not only on the providing technology side. So for you, for example, what are your concerns and also what you are so hyped about when it comes to the use of AI in this industry?
Well, the concerns are, and I think we covered it to an extent, when there is a mandate to implement no matter what,
Yeah.
and everybody is working towards a deadline, cutting corners, in a joint oversight of deciding not to do this or do it later and never go back to that. What I'm hyped about, I'm hyped about actually the technology itself and how it will evolve post hype, as what will be actually left out of it once we um, are out of the hype cycle in the next, whatever, 18, 24 months, whenever that happens. I don't think somebody can have a precise forecast at this stage. But what will be really the long-term adoption? And if we go back, we have many such examples in the past that we can use as a parallel. But to me, is how AI will continue to work side by side the human SMEs and building that efficient two-way exchange where you have a reliable, I'm not sure how to label it. Really don't want to use AI agent, but a reliable partner in your day to day that is how to say, a proper peer that challenges and develops you in what you do, rather than something you blindly follow and rely on because it's saving you the typing of a 5 minute case summary, or it's giving you some minutes here and there back in your day.
So in a way to also use your way of turning things into metaphors or comparisons, it would be like the individual will have the angel on their right side telling them exactly what's so the good conscience.
Exactly. Yeah.
Yeah. So now let's have the crystal ball moment and fast forward to 2030. So imagining I'm a head of financial crime who invested in AI in 2026. Based on what Ivan has shared during this interview, what would I congratulate myself for doing right, and what mistakes would I admit to making? Cutting corners is one of the mistakes I take from
Cutting
your
corners is one of
answer.
the mistakes. Making decisions over a bit of complex technology like your enterprise financial crime strategy and going all in on AI was probably one of the mistakes that you would be recollecting in 5 years and thinking that I shouldn't have been all in on that, or I shouldn't have used it as the key decision-making factor when going for one solution or another. What would pay off, what I think everyone would be feeling good about 5 years is not being on the far negative side of denial, saying, "Oh, that's just another bubble that the big tech is serving us. I'll just, not do anything, wait and see until it rains over." I think what would pay off is the long-term strategy and approach to it of consistent implementation, as normally organizations follow. Conduct proper scoping, proper evaluation, and resist to hype, market, and other purely political pressures, if you like, within the organization, looking at other departments. Oh, we're already using it. You should be jumping head over heels too. That is what, from the perspective of the next 4 or 5 years, looking back, and where you be at that point, would make a lot of sense. Saying, yes, we've embarked on the journey. However, we didn't deviate from our normal implementation process that follows all the typical steps. And now we have something solid that survived the hype. We've picked the right technology that had the future proof potential, that gave us the necessary uh, compliance assurance, and remained predictable in terms of cost, because at the moment we're largely enjoying, in a way, sponsored rates of access to the technology because of the huge investments made by the big 5, 6, or 7 companies that are in that space, which still remain far from any positive ROI. So, yeah, taking a cautious and consistent approach is what I think it will pay off, like most things that are carefully planned and executed.
Yeah, great. Thank you. I love this balanced approach because, in a way, you are suggesting, okay, keep an eye on your budget, keep an eye on your scope, keep an eye on how your financial crime process looks like, and keep an eye also on the subject matter expertise because the human in the loop is still important. Keep an eye on, yeah, regulations, governance, and also not to miss the benefits that AI brings, like, yeah, reducing cost of operation, increased accuracy, productivity. So it was complex and comprehensive discussions that we had today, taking us from what's working, what's risky, and what's just hype around AI. So thank you, Ivan, and I look forward to continue our conversation with what will happen over the next few months, and also share insights from NOTO.
Indeed. Thanks for having me today. It's been a delightful conversation, Mirella. So have a great day.
Thank you.